Good afternoon, everyone, and welcome to Stock Market Today for Friday, January 3rd, where we saw stocks bounce back and growth stocks have an especially strong day. Joining me to break it all down is my colleague, Justin Nielsen. Justin, good to see a bounce back on day two of 2025. Still early, but it was
Yeah,
promising.
yeah. We can't declare victory yet in 2025, but there are a few things that I think are worth considering. It's a new year, maybe a new you. Some things that you might have learned from 2024. Having a great year in the markets, has its own learning lessons. As much as you can have a great year, it's always good to still learn. What did you do right? What did you do wrong? What could you have done better? So I think I'm in that mode myself. So we'll kind of share some of the thoughts on that, and we'll also go over a few stocks, including some of the newest swing trader editions and Qs, as well as Block, GEV, GE Vernova, and Nvidia, since that one is going to be a highlight at CES on Monday.
That it is. All right. So we will take a look at those stocks. But first, let's analyze the major indexes today. The NASDAQ took the lead up about 1.8% today, followed by the Russell 2000. The gain there almost 1.7%. The S&P 500 also with a solid gain today, up about 1.25%, closing right at that 50-day moving average. The Dow also in the green, up 0.8% today, but the NASDAQ, the strongest index here, closing back above the 21-day line.
Yeah, and that's kind of the story here. The Nasdaq Composite has been the hands down leading index recently, and so this is the one to watch. And it came down. Look, I was a little concerned yesterday. It
Yeah.
looked like we were going to lose the 50-day moving average line. We were taking out the lows of December 20th. There was a lot to be worried about, a lot to make me think that we could easily go lower. But when you get support at the levels that are important, that's something you have to pay attention to. And one of the things we were talking about on IBD Live today was that if you kind of bring that December 20th low and just go a little bit further left, it's right there at some previous areas of resistance that have now become support. So you've got kind of this double whammy happening right here, making this level even more important. Now we got that bounce off the 50-day moving average line. We're looking at a move back above the 21-day moving average line. So that's a positive. The next kind of hurdle we want to see is for the lows to get above that 21-day moving average line. That's going to be a much better indicator of strength that can maybe hold. Now, look, we had that from December 20th. We had that rally where things were looking strong. It looked like we were recovering from that ugly Fed reaction. And then we rolled over with one more test. So look, we could still be in this choppy sideways action. As you said, it's only day two, right? Too early to declare victory. But at the same time, when you're getting that support, I think it's important to start. If you did do some selling, maybe buying some of those positions back.
Right.
If you have been holding, I think you feel a little bit better about it today.
Absolutely. Yeah. And we've talked about when you get a bad break like we did on that Fed reaction day, December 18th, sometimes it can take a little bit of time for the healing or for that volatility to sort of work itself out. But again, at the same time, we like to take things day by day, right? So again, today, a step in the right direction. Let's see if we can get that low above the 21-day line now. Let's
And
also take a go
most
ahead.
importantly, too, I think it was
Sure.
that you saw a lot of the leading stocks
Yes.
acting very well, getting support where you would want them, want to see them get support. So that was another important factor. And look,
Mhm.
FNGS, we've been talking about the FANG Plus, the Magnificent Seven, whatever you want to call them. This still looks so much stronger than a lot of the indexes. This is getting support at the 21-day moving average line. So
Right.
it's in a very different position. And when you've got your big heavyweights
Mhm.
acting that strong, not really giving up that much, that's a good sign as well that
Right.
we could be, on the on the side of, look, we don't want to go down. There might be sideways, but the down, it really seems to be
Mhm.
resisting that.
Yeah, and I do think the silver lining of what we've seen unfold over the last couple of weeks is that we've needed a little bit of a reset of some of these high flying stocks that have been hard to get onto because they've just been running so much. Now, some of them have calmed down, pulled back, as you mentioned, bounced from key levels. And what does that mean to us? Well, it means new watch list stocks and new buying opportunities. So we like that.
Yeah, absolutely.
Yeah.
That was my New Year's resolution. More opportunities.
There you go.
Now just help me out, market.
Yeah. Let's also get your thoughts on the S&P 500. Not as strong, but did hold that December 20th low this week. So that was clutch. But now let's see if we can get above the 50-day line a little bit more, back above the 21-day line, and then that 6,000 level.
Yeah, and look, this is something that I know Mike Webster's been talking about with the regression lines. It's okay to kind of fall out of the channel a little bit for a day or two. That's usual. That does not kill the trend, but you just don't want to see it do it in a big way or for too long. And so
Right.
I think we were starting to get to that level where we were like, okay, you got to do something here, otherwise you're falling out of the trend. So I think the S&P 500 is still it's still okay. But we really do, as you said, we need to see it get back above 6,000.
Yeah.
We need to see it get back above that 50-day moving average line, but it isn't the leading index. And look, I know you mentioned that the Russell 2000 was, kind of, one of the stronger indexes today, but there's still a lot of damage that has to recover
Yeah.
from. Same thing when we look at the S&P 500. If we look at the equal weight, the RSP, that still has a lot of work to do before it gets back up. So again, this is certainly not a time where you're looking at all stocks being equal. They aren't.
Mhm.
They're the market is favoring certain stocks, and those are doing fine. But there's a lot of other stocks out there, the majority of stocks out there, that just are not doing great. And so you have to be very cognizant of what you're invested in. Are you in the strength? Are you
Right.
in the leadership? Or are you in the ones that are struggling like RSP?
Yeah, exactly. And I mean, one easy way to tell that is by looking at the relative strength line. That's a clear indication of what's acting stronger than the market. You can also customize that relative strength line if you want to measure it versus a different index or the
Right.
industry group or an ETF. So that can be helpful too, but also taking a look at a lot of stocks. And if you do want to sort of narrow down the pool a little bit, what I like to do is have a relative strength filter, but also look for stocks that are near those moving averages. So that way you can scan for stocks that are bouncing from
Mhm.
moving averages. So that
Yeah.
can be helpful as well.
And look, I notice that you have your moving averages on your relative strength lines as well. That's an important thing, because it really, if you took the price out completely, you could still tell a lot just by looking at those relative strength lines, where they're at in relation to their moving averages. Is this something that is stronger right now, or is it something that's weaker? And just looking at RSP, you can see it's below, the relative strength is below its moving average lines. That tells you it's on the weaker side. Where do you want to be? You want to be on those things that are that are on the right side of those moving average lines.
Yeah, absolutely. So we'll be taking a look at a couple of stocks soon that I think are all looking pretty good on that front, if I were to imagine. But just to underscore what we were seeing underneath the surface, let's take a look at some ETFs. I did sort this by what was moving the most today. And with growth in focus, here's a big clue: ARK Innovation, ARKK. Justin, get this, up 5.2% today. So
Yeah.
a lot of your high flying type growth stocks definitely on the move today.
Yeah, and this is something that we do have on Swing Trader. I have a position in this myself. Yeah, it's look, we've been noticing even since the election in October, November, a lot of heat, right? A lot of the stocks that are maybe a little bit more speculative in
Right.
nature. And look, that's where Kathy Woods, that's her forte. So ARK Innovation ETF up really strongly again, getting support where you'd like to see it. Very strong, back above its 21-day moving average line. And let's just give some kudos to that relative strength line as well, back above its shorter term moving average line, because again, a lot of the strength is where this, in some of these more speculative names and in your your Magnificent Seven. So kind of the dual mandate there is for those two areas right now. So we've seen some really high flyers again on IBD Live. We were going through some of the highest flyers from quantum computing, on down to a lot of these very speculative names that have just been going kind of nuts. But you also have, again, your very, very top heavy in the indexes, your $1 trillion companies that have also been doing well, as evidenced by FNGS that we looked at earlier.
Right. Exactly. And I believe Tesla is still in this. Full disclosure, I do own that. That had a stellar day today, up over 8%. So
yeah, I do have a
played
position in that
there
as well. Another one that didn't even come down to the 50-day moving average line. So those are stocks that when the indexes are coming down to 50 days and the things you're looking at aren't, that's a relative strength measure too.
Exactly. Chips also with the solid day. We'll take a look at one top chip stock soon, but SMH up 3%. And then behind that, what else is in consumer discretionary? Oh yeah, that's Tesla again.
Right.
So up 2%. So those were some of the leading ETFs today, Justin.
And not a small position in that
Yeah.
XLY. Tesla is what, like a 20% over 20% position, basically XLY. You got to look at Amazon and Tesla, both. That's together 40% of XLY. And I'm going to skip ahead here, Allie, and just do the contrast to XLP, because XLP, that's, you've got your consumer discretionary, which is your XLY, and your consumer staples, which tend to be a lot more defensive. So as much as, we can say that the average stock isn't doing great, it's not like there's this big, oh, let me get defensive. Let me start getting canned goods and going into the bunker. That it's staples like your Hormel Foods and your Campbell's Soup and all of those things that are doing well. The relative strength on the XLP is still pretty poor. And that's kind of showing you that it's not that people are moving money into the hiding places. They're still very willing to go in those speculative names.
Yeah. All right. Are you ready to take a look at some stocks, Justin?
Yeah, let's do that.
Okay, let's do it. So here's a look at ticker SQ. This is Block coming down to its 50-day line, an orderly pullback. Of course, the light holiday volume helps with that, but bouncing today up 6.2%, and the swing trader team decided to take action.
Yeah, and by the way, this was something that both Leaderboard and Swing Trader both added. And I should mention that this was something that Brian Shannon did a pretty deep analysis on IBD Live today. For those of you that aren't following Brian Shannon, he was on IBD Live, and he's just a phenomenal trader. His anchored VWAP, if you haven't studied that, he's got a book on it. Really, really useful stuff there. But look, here's another one with that support at the 50-day moving average line. You've got that relative strength. Big surprise, it's up over all of its moving average lines. You broke the downtrend on the relative strength line as well as the price. And it's very easy to see. I always try to imagine this. Can you see a scenario where that relative strength line can get to highs before the price does? And with this still, quite a ways. I mean, it's still what, 6-7% off of its highs. It's very easy to see that this could get to a high on the relative strength before the price. So that's something that when stocks do that, it kind of gives you a leading indicator that this is something special. When you look through the model book stocks, if you go to How to Make Money in Stocks by William J. O'Neill, and you look at the first 100 charts in chapter 1, some of the best stocks over the last 100 years, you see that a lot of them have that factor where the relative strength gets to highs before the price. So the fact that I could see Block doing that is kind of an extra bonus for this. I like that you went to the weekly here. Let's go out a little bit more just so people can see where this came from on the monthly chart. Blowing out on the weekly. I mean, it did have kind of a pretty dramatic, fall from grace. But a lot of these companies that had these big falls after 2021, February 2021, where a lot of growth topped, they really have been coming back onto a lot of screens recently. These were really kind of dropped from my radar, to be honest with you. They just weren't coming up that much anymore. But A lot of them have started coming back onto my screens. Some old favorites like, Twilio and stocks like that, Shopify that we hadn't talked about in a while. They're really climbing strongly. So I would put Block in that area. Really strong action, and some of that overhead supply that we talk about. Whereas it is a concern once it gets to be a certain age, and that black line is a good indicator on our weekly charts on Market Surge, where you're getting to be about 6 quarters or more in terms of age for that overhead supply. Once it gets past that, it's a lot less relevant, because there's the old saying in the market: they either wear you out or scare you out. And if they haven't scared you out at that point, they certainly don't seem like they're wearing you out. So you're usually looking at your stronger holders, not your weaker holders at that point.
And I really like that upside reversal at the 10-week that is showing on the weekly chart here.
Love upside reversals. One of the best ways, especially in an uncertain market, where you can kind of test the waters with very low, lower risk. It's not no risk,
Right.
no such thing in the market, but you can really have low risk, because if it goes beneath that low of your reversal, you immediately kind of know, oh, this isn't doing what I expected it. Reversal tells you that you expect it to go higher from there, and if it does undercut, then your timing is off, and you can just move on very quickly. It's so easy for me to just cut something when it undercuts that area. It's very cut and dry.
Love it. Okay, next on our list, we want to take a look at ticker GEV. Full disclosure, I do own this one. An upside reversal here and an RS line blue dot, Justin. It's been forming an orderly base, coming right to this 10-week line, getting support there a couple of times. Is this going to be the bounce that fuels a breakout? I guess that's the big question.
Well, I'll be honest, there have been a couple of these that I've tried, and it hasn't, worked out yet, but I'm in this one again. We did put it on Swing Trader. I think this one looks actually stronger than a few of my prior attempts. So that's giving me a little bit more of a feeling of good vibrations here. Now, this is actually an article I wrote. I think it was either last week or the week before, because this was a swing trade that we had, and one that we've revisited. Look, GE, since it kind of did its spinoffs, it went to GE Aerospace, that kind of held the GE ticker, GE Healthcare, GEHC, and GE Vernova. So this truly was a case of the sum of the parts being greater than the whole, because you've seen a lot of value getting unlocked from this, especially GE Vernova, but GE Aerospace as well. So this is something where we've seen some really strong action in these components, and GE Vernova has, I think, been the strongest. And I especially like when you've got such a strong move, and then the stock just doesn't want to give any of it away, whether it's an earnings or whether it's just a trend where it doesn't want to give anything away. It's kind of that high tight flag look. Mark Minervini calls it power from pivot, or power play. There's a lot of different things that you can call it, but the ultimate action that you're looking at here is that the stock doesn't want to give anything up. And especially when you pause and let that 10-week moving average line or 50-day moving average line catch up to the price action, you get a real easy level of support to be paying attention to. And I think that's what we have for GE Vernova here. So a good look to this chart, a nice break of the downtrend, very tight action after a strong move. You do have earnings that are going to be coming up, on this stock and a lot of stocks. Look, we just ended the quarter, so you can expect over the next few weeks, we're going to start seeing some of those earnings, and that's going to pick up considerably next month. So that's something to be aware of, but I think you've got a chance to get into this, and get some cushion before those earnings come out.
Yeah. We'll have to see. Okay. And we also want to check out Nvidia, which Justin and I both own. But today, it was a notable day. So that's why we wanted to bring it up. It has importance in the broad market due to its index weight. It's a heavyweight, not only in the AI theme, but also in the chip sector as well. And leading today, outperforming in a notable way with a gain of about 4.7% to retake the 50-day line and that 140 level, which goes back to those highs from the summer. So a lot of key levels it's clearing as this relative strength line continues to tilt higher. And I think the other key thing to point out here is there is a potential catalyst, or at the very least, a news event that investors are going to be digesting on Monday night with CEO Jensen Huang speaking as a keynoter at the CES show in Las Vegas, the tech event that kicks off the year. So I would assume there's going to be some juicy announcements there, whether or not they're perceived as juicy or impressive by the market is yet to be seen. But that is something for the radar for NVIDIA investors.
Yeah, I think the toughest part with Nvidia is they have just blasted through everyone's expectations time and
Right.
time again. At a
And they
certain
keep
point, do
doing it.
people just start thinking, "Oh my gosh, there's it can do no wrong," and the expectations get so high. Now, you've been to CES a number of times. Have you ever seen
Mhm.
Jensen Huang at the keynote?
Yeah, I believe I was there when he was the keynoter. I think it was 2017. I believe
Hmm.
I was there. Yeah.
Yeah.
It
So
was announcement after partnership. I mean, it was a jam-packed keynote.
yeah. And so that is definitely something that's worth watching. Again, will it be market moving? We don't know. But look, I think one of the concerns that I had with Nvidia is that it really hasn't done much since
Yeah,
June.
it
There's
hasn't.
been a lot of flat action, but you look at the relative strength, and it's hard to ignore that. This is one of the big components in the market, in AI, in chips. It's the elephant in the room, the big gorilla. You just really can't get around how important this company is to so many different industries. And so when you see something like this, where look, it was a little lackluster, it was hanging out below that 50-day moving average line, but this pop today really looks special in terms of a break of the downtrend, the relative strength, just a lot of things getting back in motion. Now, that doesn't mean it has to work, right?
Yeah.
And that's why we have our sell rules. As much as we might love a stock today, we can hate it tomorrow because it doesn't do what we expect. So it's important to kind of build up expectations of what you think should happen, and then adjust those as the market gives you more data. And if the market is telling you, look, this is not as strong as you originally thought, or your timing is off, it's important to really recognize those clues and move on. Because there's so many stocks out there to choose from. The last thing you want to do is get married to one that is an underperformer. But again, Nvidia, I have a soft spot for it. This is one that I've made, a decent amount of money on, and so it's one that I like to revisit. I know it. I know how it trades, and with as much potential as there is for its future, it's hard to discount when there's an opportunity to add. Now, will I go as heavy as I used to? Maybe not, but it's still, I like having a piece.
All right. And let's now circle back to the market, take a quick look at a precedent or two, and then we can get those thoughts from you, Justin, about the new year. So, just a reminder for everyone, here's a look at the current NASDAQ. Strong uptrend from September, peaking a little over 20,000 back in mid December. Then we got that break, pickup in volatility, an attempt at a reversal on December 20th, then an undercut just this week, and a bounce again. So, with that in mind, I think a couple of things potentially to look at. I think I'm going to the right place. Maybe it's a little bit further here, Justin. And again, this is a little bit of a different look um, to it now. I think this is what I was. Maybe it was the second one, the second
So
little
so
correction.
just
Yeah,
to
down to
kind of
the 50
remind
day.
folks
Go
of
ahead.
what was happening here, this was after a really strong move in 99. And this is a story I shared recently. Look, Bill in 90 over the summer of 99 thought the market was done. He was very bearish. He thought we needed a major correction. And to his credit, the founder of Investors Business Daily, Bill O'Neill, changed his mind. He had written a letter to 500 clients about how bearish he was. A few weeks later, we got a follow through day, and he did not miss that rally. He just changed his mind and said, okay, this is not doing what I thought it was. I'm not going to plant my flag in the sand. So he participated in that huge rally. It was a game changer for the firm, really, in terms of the amount of money made at that end. But you have to remember that there can be a lot of volatility. And look, this wasn't even the top here. You might think, oh my gosh, this must have been where things topped because of how ugly it got. But we didn't top until March, another 1,000 points, another 25% higher from those levels. But it did get a little choppy. A lot of times we see that to kind of start the year as people maybe jostle from some really strong gains. Maybe they try and push those off. They don't want to take the gains and have it hit that tax year, so they push it off until the beginning of the year before they do their selling. There's a lot of cross currents that can happen. And one of the things we didn't even talk about today, but is worth mentioning, is the 10-year Treasury yield and how that's been moving. So it's something to be aware of. That when you get these big moves in the market, there can be some very strong moves to the downside that look bad at the time, can have some really test your mettle, but at the end of the day end up being little blips when you see what can happen afterwards. So I think you have to be prepared for both. You have to be prepared for what ended up being the ultimate top here in March, on March 10th. And then, we really kind of came in, pretty hard, or for things to get a little bit, a little bit choppy. Or look, it could be like we're in January, and once we get through that chop, it's another raging rally. One other area to look at, I think, that would be worth checking out is the summer of 2003. So yeah, if you just go ahead and put 2000 or 2003 there, if you go to December 2003.
Yeah, that's what I meant to do.
Yeah, I know you did. We had this really strong rally in March. This was really the turnaround from all that devastation after the dot-com bubble burst. The crash on the Nasdaq. I mean, remember, the Nasdaq was down 79% at its lows, and so we had this really strong rally. Now, remember, it didn't go straight up. There were a lot of pullbacks of the 50-day moving average line, a lot of time spent under the 21-day moving average line. And as the summer unfolded, it did have those tests. You didn't go straight up. You had some choppy areas where for a month and a half, 2 months, you weren't making progress, but the overall uptrend was still intact. So I think that's something that's worth remembering, that right now our overall uptrend is still intact. If you're looking at the power trend, for instance, with the 21-day above the 50-day moving average line, that's something that even when we were pulling back to the 50-day moving average line, that was still intact. So we've got some very strong undercurrents here for the market. Now, again, as we saw with RSP, that is not something that's being being transferred over to all stocks, but you are certainly seeing it in the NASDAQ composite right now. And it's worth keeping in mind that there can be a lot of these tests along the way, a lot of this sideways action for weeks and weeks, where where you don't feel like you're making progress, but the market isn't done yet.
Right. And I think the other thing too, that an example like the 2003 market shows, is just how pivotal those pullbacks and bounces are, right? In terms of your timing of your entries, I think. And of course, there's no predicting the future for what is to come in 2025. But if we are to see a continuation of this uptrend with some twists and turns along the way, for me as a trader and mentally, getting in when you first start seeing those turns and those signs of getting back on track after a pullback helps me avoid getting shaken out before the breakouts become obvious, right? Buying on strength, but not waiting too long to get in just to get shaken out. So that's a way I like to think about things.
I completely agree with you there, Allie. And I want to just kind of focus in real quick. I don't know if you want to change the date or just kind of, yeah,
Sure.
maybe change the date to August 12th of 2003.
Okay.
Um, just
The
to kind of
12th.
zoom in there. And
Aha.
just as a reminder, what happened here was, we had a pretty bad break, kind of like what we saw with that Fed. We, ended up looking like we were going to bounce off the 21-day moving average line, saw a downside reversal, came down, actually spent some time below that 50-day moving average line, and then, retook the 21-day moving average line, and it was kind of off to the races from there. So, we went from 1640 at that low to 1913 in about a month's time, and that's 300 points when you're at 1600. That's not chump change.
Mhm.
So again, that could be in the cards. A reason to be bullish, a reason to be optimistic. But at the same time, if you're starting to see that, falter, not
Right.
follow that precedent, it's really important that you kind of
Yeah.
recognize when, oh, it's not doing this. I need to
Right.
find something else.
Yeah, and it seems like a good place to shoot your shot because you have some levels where you clearly know that you're wrong.
Exactly. And it's all about, not just knowing when you're wrong, but kind of admitting it. The first step is to kind of get through that denial phase where you're like, I can't be wrong. I did so much work. I did so much studying. And for those of you that haven't looked at some of these examples that Mike Webster's been sharing, he shares them on X. I think a lot of these are pinned tweets. He's doing homework all the time. You might, think to yourself, well, I did all this homework. I did all this work. I deserve for it to pay off for me. But think of it this way: if you did all this work and it doesn't end up working out,
Yeah.
let it pay off for you in a different way, and that you're recognizing it quickly, that it's not a good analog, and
Right.
that you protect yourself, because protecting yourself is just as important as making the big gains, keeping them. And especially after a year like 2024, where
Mhm.
you might have had some really great gains, you want to make sure that you don't lose them all,
Yeah.
by overstaying your welcome.
Exactly. Any final thoughts, Justin, on you teased some New Year's resolutions, lessons for us. So,
Well, I'm gonna go back to Brian Shannon's visit with us on IBD Live this morning, because one of the things he said was, someone asking him about, whether a cheeky short was a good idea for something, and Brian made a very good point. Do you really want to be ignoring your discipline 2 days into the new year? If anything, look, you might have gotten, and I certainly did, I got away with some really high flyers, maybe larger positions that I meant to have, and it worked out for me. But recognize when you're kind of a little bit lucky, and when you've actually made some good decisions. And look, there can be a lot of luck to this game. You do it long enough, and that luck will come to you in favor, because of your preparation, and
mhm.
because you're doing enough of the discipline part, the cutting your losses, all of those things that allow you to stay in the game, to participate in those lucky moments that come, when things just really go your way. There are the ebbs and flows of the market, but the discipline, the consistency, those are the things. And look, you can falter every now and then, but the more you're disciplined, the more you're consistent. If I learned anything from Bill O'Neill, it was that discipline, that
Mhm.
when something turned, he just didn't argue with it. He also had the discipline to engage in his routine. Every weekend he was looking at those charts. So something that every new year, it's one of those things that I think about some of the traders that I've learned the most from, and a lot of times it's the same lessons that come up over and over again, that I just want to get better at: the
Yeah.
discipline, the consistency, and applying the rules, and coming up with the plan ahead of time, and not being so reactionary. All of these things I think we can all do better at every year, and that's my goal this year.
Well said, Justin. And I know we've also got a lot to unpack. Next Wednesday on the podcast, we're going to be kicking off the year
Who's the
strong with
guest?
the two of us
Oh, okay.
on the show. Yeah, so we'll be talking about lessons from
Yeah.
2024, talking about some trades that we made and
Mhm.
what we've learned and what we hope to take into 2025. So I'm really
Yeah.
looking forward to that discussion.
The thing I'm most excited about is having Allie on the other side of things, because a lot of people just, hear you ask the questions, but don't always hear the answers that you have to questions, because you have a lot of good answers. People don't realize that, you have to have a lot of knowledge in order to know what questions to ask and know what the audience needs. So I'm really looking forward to people kind of understanding how much knowledge you are really bringing to the table when you're doing all of this
Aw.
hosting.
Well, thanks, Justin. I'm on a great team. I've learned a lot from you guys, and yeah, I think it'll be fun to share what I've learned because working at IBD, I when I started, I wouldn't have thought how much of an impact. I thought, oh wow, I'm going to learn how to invest, but really, the impact that it has,
Uh-huh.
it's definitely paying off. So I think that we have such a great community, whether it's this show, IBD Live, you do the podcast and the Swing Trader Show. We have so many opportunities for traders out there to learn, and I know just by talking to people out there that it really has paid off for them. So I'm excited to share a little taste
Yeah.
of what I've learned along the way. So that'll be fun. Looking forward
Looking
to it
forward to
next
diving in
Wednesday.
with you.
All right. Well, thank you everyone for watching. And thanks again to Justin. That is it from us for this week. And we will catch you next week, starting Monday morning on IBD Live, investors.com/IBD Live for all the details on that. We'll see you there. And then we'll also see you right back here on Monday after the close. Have a great weekend.